Well, for more on this, let's cross now live to Tokyo and Curtis Fries. He's Chief Executive Officer at Gro-Bels. So, Curtis, thank you very much for joining us. What's your reaction to the Tankan survey?
Well, I do think it was better than expected. The numbers looking out, of course, are a question mark, and a lot of that's down to the yen. The yen is a distraction because it's always quoted in dollars, and it's more a case of dollar weakness than it is of yen strength.
But it's a reality nonetheless, Curtis. And is this the main reason for that forward-looking portion of the index looking so weak?
Yeah, I think so. I think manufacturers, they're focused on the yen. I don't think they're focused on where demand is, and that's in Asia. Asia is the biggest trading partner with Japan. It's not the U.S., and Asia continues to grow. Matter of fact, today, Asian markets are at a 5-month high, showing that investors in Asia think that, they're, in a way, decoupling from the U.S.
So what you're saying is these Asian economies can afford these Japanese goods?
Well, they can, and there are very few substitutions. Japanese make very specialized machine tools, specialized precision equipment. The sort of things that Japan is selling, there are very few alternatives.
What about BOJ intervention in the currency markets again? Do you think we're going to see more of that?
Oh, I do. I think it'll be tested, and if not tested again and again. I don't think the yen is that big a concern. As a matter of fact, I do expect it to go even stronger. I don't think that is going to decide the course of Japan's future. The yen is still very weak relative to purchasing power. So if you compare it to where it was at the last time it was at these levels years ago, the yen would have to be trading in the 50s to the dollar, somewhere around 52, 53 yen to the dollar, to reflect the same level of strength as before. So it's not nearly as worrying as it was the last time it strengthened.
How risky, though, is this policy of intervention in the currency markets?
Well, I don't think it's that risky. As a matter of fact, I think as long as it's just a printing of currency, and I think the best intervention is for the Japanese to literally print yen. And that money will go into the money supply. It'll affect psychology, but it'll also affect supply-demand for money. And I think that is what we need in Japan. To break the back of deflation, we need just more yen. And,
so you're proposing...
that, in a way, the strengthening yen actually gives them an excuse to reflate Japan.
So you're proposing more quantitative easing from the BOJ when they meet early next month?
Exactly, and I think that's what the markets would go up on the back of. Any other market would be nervous about money getting printed, but Japan, that's exactly what we need to break the cycle of deflation.
You also need companies, of course, investing all that cash, don't you, in the Japanese economy?
I agree, but I think there are ways to invest that cash. It doesn't have to be capex on new plant and equipment. I think there's going to be a series of M&A transactions similar to what we're seeing outside of Japan. The strong yen and the very low interest rates in Japan is a perfect environment for M&A. Corporate Japan has very high cash levels, record levels of cash. Corporate Japan has tremendous ability to borrow, and there's very little lending demand from many other sectors. So there's a great chance here for Japanese companies to go shopping. So I think we'll see some very high-profile buys by Japan, buying market share and also buying growth outside of Japan.
Curtis Fries, Chief Executive Officer at Gro-Bels, we thank you very much for joining us.